Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. I was like, what word goes there? Anyway, the question of the day is, tell me what you think Bitcoin's price is going to be in the year 2032. I know we have a lot of really interesting ideas or predictions as to exactly how high Bitcoin's price is going to go. And yeah, without any further ado, let's jump right into it. In Optimism Prime news, of course, it continues. The largest portion of the cryptocurrency space believes that something amazing is going to happen, is already happening to the price of Bitcoin within the cryptocurrency market, as we've seen over the course of the last couple of months, with a lot of people talking about it. A closely followed crypto analyst has said that Bitcoin has now moved into bullish territory as the halving approaches. Yes, we are less than 8 weeks away from it. The news has been quite often, and what I've seen before in the past is that as we are anywhere from 4 to 5 weeks away, the price begins to move up in anticipation of the actual halving, and then we sometimes tend to have a light drop in price after the halving as a lot of people try to sell the news, but this doesn't usually always end up working out well for them. Someone on Twitter who a lot of people like, his name is Wrecked Capital, told people on Twitter that Bitcoin has entered what he is calling a pre-halving rally phase. This is, once again, before we get to the actual halving, prices tend to move up. We get to the halving, it dips for like a day or two, somewhere around there. And a lot of people aren't even certain that a dip would be significant this time, because any dip that we've seen before in the past month, especially since these companies have gotten into the ETF spot Bitcoin space, has been swept up almost immediately. The issue was before is that the selling off was quite dramatic because of Grayscale, but they were also forced to do so. So what happens when the sell-off isn't that big, when it's like 1/100th of what Grayscale was doing? Do we have the same numbers for the price to go down? According to the trader, Bitcoin's bull markets can be broken up into 3 main chapters. They are the pre-halving rally, the post-halving resistance, and the post-halving parabola. He says Bitcoin has officially kicked off the first phase. A lot of these people, when you check around on Twitter, they have different charts and metrics and things that they're all going to or going through. If we begin to see this over the course of the next, I say 10 days, then it's kind of all but confirmed. Usually, like I said, it tends to be like a month before, or like just before the other month begins, like the 5-week period, simply because people within the crypto space begin to talk about it, and then we start to see it on like normal news, on CNBC, Fox Business, and all these other things, and that kind of gets everyone else into the market in anticipation of this event. But the prices tend to pump like just good enough that it kind of like scares people, and this kind of like FOMO-esque kind of rally. So the idea would be, if we got above 65,000 and we're near the previous all-time high before the actual halving, that would cause people to completely lose it, and then the price will begin to pump even further. And we also have a lot of really weird metrics as to like exactly where prices would be going at the 2025 area. I know it's like literally a bit too early to be talking about 2025, but it all plays into the exact same thought, the exact same narrative. We're the only one that has lightly made sense was the information that we got from that guy, Anthony Scaramucci, who said that usually we look at, he said his analysis shows that whatever Bitcoin's price is on the day of the halving, you do a 4x in price, and that ends up being the new all-time high what have you, so on. And it's like, okay, we'll see if that actually ends up playing out, because that would then only that'd be 60, 120. That'd be a $240,000 Bitcoin comparative to the 300, 400, and 600,000 that we've been hearing for 2025 already. He said ominously on Twitter, "Time has run out. Bitcoin has already transitioned into the pre-halving rally phase." And then there's a little chart right here showing 2024. It's showing the price movements bouncing up and down. Apparently, there's going to be a dip in a couple days. And then from the dip, I think we're supposed to just kind of bounce off of this area. Wait, actually, yep, that would definitely do it. Also, I guess tying nearly directly into it as well, Grayscale, the nerve of them after crashing the market, has released a new research report. It says Bitcoin's technical fundamentals and use cases have significantly increased in the last year and have likely made the asset stronger ahead of its historic bullish halving event compared to previous years. This was released by Grayscale in a research note. It said, and I quote, which is also becoming a large discussion when it shouldn't and doesn't have to be. They said, despite people mining Bitcoin, the revenue challenges that they face in the short term, fundamental on-chain activity, and positive market structure, updates make this halving different on a fundamental level. While it has been long heralded as digital gold, recent developments suggest that Bitcoin is evolving into something even more significant, going backwards, or rather forwards, and starting at the idea of people who are mining Bitcoin. Every single halving, I don't understand how this continues to become a conversation, but it always is. For those of you who didn't get it, if there are 900 Bitcoin created per day, and the halving happens, that number becomes 450. So the amount of money, technically, that these people were making essentially gets cut in half. And there's always a discussion about the people who are mining the coins not knowing or seemingly being unaware that the halving is going to take place and that their revenue is going to get cut in half. What always ends up happening is that the price adjusts upward, so that the price of a Bitcoin costs far more than it did before, so that these people can still pay their electricity bills. But there was news I didn't have it in a video. It gave me like a really big headache to look at it. There was a news story, multiple news stories a couple days ago about how people who are mining Bitcoin are like selling off their coins. And I'm like, they always have to do this. Like, they need to pay their light bills. Like, they don't have a normal, 80, 90, 120 a month for their light bill. These people have like $815,000. Like, they have entire gigantic warehouses with 300,000 machines inside of them that are running 24/7, while sometimes they also have like ACs and other cooling systems on to cool them. And so the vast majority of them, whatever you mine, a portion of it does get sold off. This is why we have the calculations that range around the world that will show in this area it costs $18,000 to mine a Bitcoin. So if Bitcoin is $50,000, they're making a profit. So they would only have to sell off a fraction to make the 18,000 of a Bitcoin. So of course they would have to sell. But I think a lot of the news, quite recently, has been on this like really weird, scary uptick. It's like things are going exceedingly well, but you should be afraid. The price might go higher, but you got to watch out for the dips. This is a really cool event might be happening in Bitcoin and might take us to 300, 400,000, but also watch out for the people who are mining who might dump their coins. And it's like every halving we have to have this conversation. It's every single 4 years. As it stands right now, Bitcoin's technicals are fantastic. The amount of people who are using it, the amount of new people who are creating wallets all the time, the amount of money flowing through the market, where the price is apparently is a lot better than other years mathematical wise, and also the range that we could move up before we actually get to the halving, or immediately after the halving. There was someone else a couple days ago who said that he thinks that the post-halving price, like summer-esque, is going to be around $118,000. So, all ships go, you know what I'm trying to say. So everything seems to be relatively good, but for some reason, a lot of people keep trying to throw in some type of negativity into the machine just to try and make it seem like things should be scarier than they actually are. Even on this chart, which is a little weird for those of you not looking, this chart shows that if there is like a bit of a drop somewhere around here, the actual movements upward would then put us around 120,000 by April, May, June, July. Yeah, this would be around July or August, $120,000 per coin, which, I'm taking a step back because let me not get myself excited, because that would be a little bit too intense for me, even, I think, because that means next year would be completely insane price-wise if we already nearly double the previous all-time high this year. Yeah, the optimism flows freely in this space. Very few negative things have I seen in the last couple of days. I think the most negative was someone spouting out their normal nonsense where they were saying that they think that Bitcoin has to go back down to 33,000 before it can, aim for the moon. And then once again, I say to the other people who said Bitcoin was going back down to 12,000, 18,000, 22,000, don't forget those numbers that we never ended up going to. I simply say, why? Why do you continue to put out this nonsense when you know that it's not going to happen? Any dips will be minimal because the dips that we've already had were bought up by the ETF holders and everyone else who's anticipating some kind of a major movement in the market. That's the optimistic prime news. If you watch Transformers, you should get that joke. I have a feeling some people did, and they were like, what's an optimistic prime? Anyway, okay. Let's move on. Okay, but still, no. Robinhood, a leader in the financial technology sector, has announced a partnership with Metamask, a product of Consensus, to streamline purchasing cryptocurrencies. This collaboration is set to enhance user experience by integrating Robinhood's most cost-efficient order engine with MetaMask's widely used digital wallet, facilitating a smoother and more secure avenue for users to engage with Web3 technologies. Once again, we have another company who is partnering with MetaMask. Much like Bitcoin's original idea for economic prosperity for 8 billion people, which has basically gone out the window. MetaMask, now correct me if I'm wrong, because I remember this being it. MetaMask's original purpose was to basically be an online portal for people who wanted to deal in, before it was even called Web3, who wanted to deal in Ethereum, the worldwide computer, on their own basis through their own browser in a private kind of setting, without other people having to dig through their information. Everything would simply go through Ether and the MetaMask system, and people could live their cryptocurrency fantasies. Over the course of the last year and a half, they now have MetaMask has partners with Visa, with PayPal, and now with Robinhood, all under the idea of making cryptocurrency purchasing and selling and usage a lot easier for the average consumer. There are already a multitude of ways to be able to buy and sell and deal in crypto, and I can only assumption that the movements of MetaMask, hear me out here, I assume the movements of MetaMask having to deal in centralized entities is because of two things. One has to be money. I'm sure they realized that, aiding Robinhood, PayPal, and Visa in cryptocurrency transaction information, which is all being accumulated by these companies, and also being able to bring new customers to them and from them back and forth between these companies would only aid in their profits. It's just absolute logic that that's how money actually works. The other one, which I am going to assume logically probably has to do with regulation as well. Governments know exactly. If I know what MetaMask is, gosh darn it, they probably know exactly what it is as well. And I assume that behind the scenes, MetaMask probably came under fire in some sort of way that we maybe just don't know about. And the easiest way for them to get out of the crosshairs probably has to do with collaborating with centralized entities to say, look, we're sharing information, we're doing things in a regulated way. This is the only way that I can kind of conceptualize why a company whose main idea originally was DeFi, Web3, do it on your own in the safety of your own home would have linked up with these mega companies. It has to be money. And it probably has to be regulation. And then it goes on to talk about exactly how amazing the partnership is, how it's going to reduce barriers and yada, yada, yada. That's all the corporations speak that they have to say, because you can't say, well, we're trading privacy for money. We're making sure that your information is not as private as it was before because Gary Gensler sent us a really weird letter in the mail that we didn't care for and kind of things like that. So if I remember correctly, Robinhood apparently in the United States is the best thing since bread came sliced, and a lot of people love it. A lot of people use it. It's like the thing to use if you're into finance. Remember the olden days where Shiba Inu and Dogecoin and other coin, was it Cardano? I don't remember. All pumped up in price when they got added to Robinhood. So I assume this will only help them out in the long run as well. Bit of a shame that a lot of the cryptocurrency space's original ideas have been completely demolished and just basically turned into finance 3.0, which is where we currently are. So we tried to get away from the old system. We got dragged in, and then, yeah. So cool. This was, of course, very popular news. Anytime Robinhood, especially Robinhood, is in the news, it ends up becoming quite popular. So cool. Now you can give all your information that you had private on MetaMask to Robinhood. Same exact thing with Visa. Same exact thing with PayPal. Give all your information away because that's the way that the future works. And yeah, let's move on. Also in super popular news, inflows into the ETFs, the spot Bitcoin ETFs, continue to do exceptionally well. The spot Bitcoin ETF that was issued by ARK Invest and 21 shares has apparently joined the $1 billion club. They now have officially more than $1 billion worth of Bitcoin in assets under management. It says as of the 9th of February, 21 shares took to Twitter announcing that ARK-B, its joint spot Bitcoin ETF with ARK Invest, has registered more than $1 billion in their Bitcoin holdings. The asset manager attributed the figure to a growing trend of trust and interest in digital assets. They also have a screenshot. The total number of Bitcoin purchased by the duo is approximately, they have 21,455, estimated to be just over $1 billion US dollars. Cool. This also, I don't want to use a term like pales in comparison, but it's nowhere near what the numbers are for BlackRock and Fidelity, but also, once again, they're BlackRock and Fidelity. So you just got to kind of assume that those numbers would be a little bit higher. But yeah, awesome. The accumulation continues. It has not stopped. It has not slowed down, and probably is not going to for a very long time. I still am of the, I wonder exactly how much accumulation is going to have happened or will have happened by the time we get to the halving. Because the amount of Bitcoin that two companies own is quite staggering. And then if you put all the other ETFs together, those numbers just look completely insane. Is this also one of them as well? Nope, that's something completely different. That's the ARK 21 shares spot Bitcoin ETF, now has over $1 billion worth of Bitcoin in just about 4.5, 5 weeks news. And yeah, let's move on. Also in, I guess, news, popular news, I'm not really exactly sure. According to Fox Business journalist Eleanor Terrett, T-E-R-R-E-T-T, Terrett, asset manager WisdomTree, is working closely with the New York State Department of Financial Services, or the NYDFS, to offer crypto-related products to customers in New York. You should all be aware, for those of you who are not, while they use the term the United States, nearly all the times, whenever there's any type of new financial instrument that gets released, when a new cryptocurrency is added to Coinbase, or previously before to Kraken or to Binance or to Gemini, for whatever reason, the finance capital of the world did not allow it. So they always had to go through some other type of like jumping trick to have it actually become legal within New York. It was always New York and Alaska. So once again, if someone can explain to me how New York became the finance capital of the entire world and nothing gets launched there first, I had always just assumed, like literally, like I can't be the only one who assumed that New York kind of got everything else, like got everything first, and then everyone else kind of got it later on in a line, and therefore, anyway, so yeah. WisdomTree is working with the NYDFS to be able to offer crypto-related products to customers in New York. According to sources, the New York Department of Financial Services is close to approving a limited purpose charter for WisdomTree. And here's a little tweet for it right here. In a recent post on Twitter, Terrat noted that the NYDFS approval would allow WisdomTree to conduct digital asset business in New York State. The journalist highlighted that only 9 other firms, including Coinbase, Fidelity, have limited purpose trust charters for crypto. Why is everything so difficult there? Why would millionaires and billionaires, I assume for some kind of taxation reason for millionaires and billionaires, but otherwise I don't really get it. So cool. Apparently, I think WisdomTree is also one of the ETF issuers as well, if I'm not mistaken. So now they're working, and we'll have to take a while to get paperwork to get a limited charter to allow them to do business in New York, because, you know, you got to make everything difficult, because then it ends up being worth it in the end, right? You got to make sure that there's tons of barriers and tons of paperwork and extra things that need to be signed just so you can actually do business there. That's the WisdomTree is trying to get stuff happening in New York news. Okay. Let's move on. This is a bit of like a almost like a reckoning year, I'm gonna say. I don't know if you've seen it. I don't know if you felt it. This year feels very changey. Like a lot of things are changing quite rapidly, quite quickly, quite dramatically. A number of years ago, we got news that the New York Stock Exchange, I think it was a New York Stock Exchange, was getting into crypto. I'm stretching. Oh, my back. They have a subsidiary called ICE, the Intercontinental Exchange, and they created something called Bakkt, B-A-K-K-T, who announced in 2018 that they were getting into the cryptocurrency space. This was, of course, This was, of course, met with much fanfare, as a lot of people were like, the New York Stock Exchange is officially getting into the Bitcoin space. We assumed back then that them getting into the space would mean outright accumulation, like, you know, public accumulation, and that also that the products that they would be creating, derivatives or otherwise, or securities, would be Bitcoin backed, that they were essentially getting into the space, as it were. However, the problem actually is that when Bakkt, B-A-K-K-T, actually got into the space, they did it the futures way. So they got in with Bitcoin futures, i.e., you create something that says this is what you think Bitcoin's price will be in the future, and you place US dollars on it. The issue is that there's no Bitcoin moving around at all. It's just simply people betting with US dollars as to what they think the price of Bitcoin will be sometime in the future. That was popular for like a good year and a half. And then for some reason, I think that Bakkt thought that they'd be able to kind of ride the wave of the Bitcoin journey just doing futures. But then we eventually got news like a year and a half later that apparently no one was using it. And this was after we were told and lied to by a number of cryptocurrency analysts and websites and other people that the futures were going to like shape our market. In that, we used to have news, I've mentioned before, nearly every Wednesday or Thursday, that a new contract that began on Monday, if it was ending on a Friday and said that Bitcoin's price was at 50,000, but the contract said it should be at 42,000, we'd actually fall in price because of these futures, because a lot of people believed that this US dollar version of Bitcoin should dictate the actual movement of the market. So without extending this on for too long, because there's a lot more that I can say about Bakkt, this news came out, and this is what I said. It feels like this is like a very transitional year, like a lot is changing, because this was a long time coming, and no one really wanted what they were doing in the first place. Everyone just wanted something to do with Bitcoin and not actual US dollars. Crypto payments and digital asset platform Bakkt, B-A-K-K-T, has recently filed an amendment to its quarterly report to the Securities and Exchange Commission, warning the regulator that it may not be able to continue its business over the next year, citing the changing nature of risk factors in the crypto industry. They said, and I quote, "We do not believe that our cash and restricted cash are sufficient to fund our operations for the next 12 months following the date of this filing," Bakkt said in an amended report. They're going broke. Nobody's using them. Nobody wants to use them. Part of the issue is that institutions got into the space thinking that they could make an enormous amount of derivatives that had nothing to actually do with Bitcoin. That's why futures took off so quickly, because institutions wanted to have ETFs, but they kind of stopped caring because they assumed, much like governments a number of years ago, for those of you who were not here, governments, the only reason why they are beginning to create central bank digital currencies is because a lot of them announced that they believed that the public simply wanted to deal in something digital. So why not make something digital from the government? I know that sounds ridiculous, but that's what they said. They assumed that people were getting into Bitcoin and Ethereum and XRP because we, the public, wanted to deal in digital currencies. So why not have the government make their own digital currencies, not understanding that we're using crypto to get away from the old system because it's garbage? In the same exact way, the original idea that people had when we heard that the New York Stock Exchange and the NASDAQ especially were getting into crypto a number of years ago, because they were both supposed to be starting their own cryptocurrency exchanges, which also like never really transpired, was that they would be dealing directly in Bitcoin. That was what took everyone by surprise. Everyone was like, yes, it's happening. This is it. This is really cool. And then we heard, yeah, actually, we're just going to be dealing in futures. So it's a piece of paper. It's a slip that said that this is Bitcoin. Here, right here, take it. I promise it's Bitcoin. Now give me back US dollars, and I'll give you US dollars. It never actually touches Bitcoin. I don't want to say the real people in the space, but people who actually understand what's going on and understand Bitcoin's scarcity are actually holding Bitcoin. Even the idea of like an ETF, like it's cool that the ETF issuer is actually purchasing Bitcoin on behalf of their clients. When you cash out, you're cashing out back into the US dollar. You're still not actually, you have exposure to Bitcoin, but you're not actually holding the actual Bitcoin. The point is to hold the actual Bitcoin because it is the scarce asset. It is not a US dollar based version of it. So the situation that they got themselves into was that they only dealt in futures and thought that that was going to take them somewhere until a year and a half later, it was in June, where they had one month their trading volume was zero. Not one, not 50,000, not 387 million, zero. No one used it. No one wanted it because the people who really know what's up and what's happening are physically accumulating Bitcoin themselves. They're buying the Bitcoin. They have the weekly buy orders for $50, $20, $100, and they're accumulating the actual asset as opposed to what Bakkt. This is why, can you imagine being the New York Stock Exchange, creating Bakkt, and then being like, we have to close Bakkt because no one's using it because we have no money? You still have the opportunity to you're the New York Stock Exchange. You can basically create new products that are dealing in actual Bitcoin as opposed to having to go broke. According to the filing, Bakkt has been experiencing struggles with its crypto business and is now seeking ways to raise capital. A deleted post on Twitter indicated that Bakkt also amended a Form S-3 filing, which allows the firm to issue up to $150 million worth of securities that could be used to ease its limited cash flow and fund its long-term vision. Nobody wants it. I don't understand. They said, as we are currently unable to generate sustainable operating profit and sufficient cash flows, we have determined that our future success will depend on our ability to raise capital. We are seeking additional financing and evaluating financing alternatives in order to meet our cash requirements. This, of course, as you might have imagined, was also very, I don't want to say popular, was definitely out there all over the place news. I don't understand. Maybe it's because they're in New York and therefore it takes a longer time to be able to get the paperwork going. I would assume as the New York Stock Exchange, it would be quite easy to get these things rolling, but Bakkt can definitely recover if they deal in the actual asset. People in the traditional financial world are so used to dealing in derivatives of derivatives of derivatives. You're no longer touching the actual real thing. They're constantly under this illusion that as long as you make something that looks like it, like if you draw a tree on a piece of paper and say, well, look how many trees are out there. Look how many trees we planted. It's not the same thing. So in the future, and even as of now, when we see the accumulation happening, like the level of accumulation by the ETF holders is quite unprecedented as well. But also pay attention to the actual physical accumulation that we're constantly talking about all the time as well from these other players who are actually in the market, because they understand that they need the actual thing. There at some point is also going to be a reckoning. There will be at some point where people realize that they're holding ETF shares and they're not holding the actual asset. They're going to swap back into a US dollar that has inflated over the course of the last couple of years and is worth less than the Bitcoin that they even cashed out for. So yeah, in major news, Bakkt is going bankrupt. I'm sure they'll do just fine because, you know, New York Stock Exchange and all that. But this was also a long time coming. They had, what was it, 6 years now to shift what they were doing. I'm sorry. At some point, if I released a product and I saw that 1 month we had $50 million trading volume and then 5 million, then 1 million, then 100,000, then zero, I would have been like, guys, can we have a meeting? We need to redo everything that we're doing because it's simply not working out. But apparently 6 years is the magic number, or 7 years if they have 12 months left. Oh boy, it's so nonsensical. Just deal in the actual asset, especially in New York. Waiting 6 years, they would have had the paperwork by now. They would have had the actual licenses to be able to deal in it physically. What's the issue? Anyway, I do hope that you've all enjoyed. Yeah, I do hope that you all are having a great day. Morning, afternoon, evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Make sure, please, to take time out for yourself. The weeks are getting closer to the halving. I can feel the stress in the air from people regarding prices, where prices are going. Nobody wants a Bitcoin price dip. Everyone wants the price to continuously go up. If we have any day or 2-day period where the price is going down, people completely get over it. And I see the anger on Twitter. Try to take out time for yourself. I know it's not easy. I know life is literally all over the place right now. Try every now and again, if not every day if you can. Do something nice for yourself. Get off of Twitter. Literally get off of Twitter. Go watch a funny movie. Order in. Do something nice for yourself, because you can't be stressed all the time. You got to make sure that you're also like doing stuff for yourself, because we're entering the crazy period that I've been talking about for so long. When we get to the halving, it's going to be madness for around 12 to 18 months, and I need everyone to be with me. I don't want anyone like falling out as it's happening, because a lot is going to be taking place. A lot of the news is going to get even crazier. A lot of coins are going to start pumping. A lot of altcoin projects are going to start talking about their updates and their upgrades, and this is going to be happening. It's going to be a lot of movement. So make sure that you are taking care of yourself. You're taking time out for yourself. You're relaxing in some sort of way. Do what you need to do for yourself to relax. Yeah. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.